Welcome back to part 2 of the special podcast as we dive deeper into our 2025 Market Outlook Report. This podcast, we shall decode next US presidency and probable RBI rate cuts in 2025 and its impact on the stock markets. Next US president's victory and some important events soon can bring in volatility in 2025. Hence, one should keep a watch. Some policies that were announced during his campaign may be a reality, like trade policies. 25% tariff on all Mexican and Canadian imports, an additional 10% on Chinese imports may lead to a trade war. Tax policies. Lower taxes in personal income tax by extending Tax Cuts and Job Acts and corporate taxes from 21% to 15% are likely in US to stimulate consumption and corporate capex. Immigration policies. Tougher H-1B visa and immigration laws may further increase denial rates, which does not bode well for the Indian IT sector. Some other rhetoric like higher tariffs and protectionism may lead to stronger USD and a weaker rupee. Export may hurt. Higher FIS flows to China relative to India. This may also delay in RBI rate cuts. All this may make market nervous in 2025. Nevertheless, rhetoric and reality are often vastly different. The actual effect of next US president's second term will majorly depend on how much of his rhetoric would be translated into policies. On the other hand, RBI rate cuts can be a reality in 2025. Rate cuts will benefit economy, consumption and corporate earnings will get needed support. Rate cut may give further boost to real estate and ancillary industries. Consumption, which moderated in recent quarters, will get much needed impetus. Lower interest costs will encourage borrowing and lending. This bodes well for the economy, BFSI sector, and corporate earnings. Let us know which of these events you think will have the maximum impact. Stay tuned as we bring you some more interesting information from Mirae Asset Sharekhan's Market Outlook 2025.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.